I'm Amy Smith, and we're here at the Orlando Money Show, and I am a national speaker for Investors Business Daily and also a market commentator for over 20 years now. And I'm here with Johnathan Hoenig, so let's ask him some great questions here. I have a great one that I'm sure our audience would like to know. How do I know which stock to buy? How do I buy a stock?
Well, two different questions. How do you know which stock to buy? I think probably even more important is how to buy an investment.
Okay.
Now, there's innumerable you could sift through, and of course bull markets come and go, but once you find something that you actually like, you want to commit capital to, how do you go about doing it? I mean, do you buy 10 shares? Do you buy 100 shares? Do you wait for the dip? So I actually think there's a particular way, Amy, that you need to buy a stock, that you should buy a stock that doesn't necessarily eliminate risk, but it really mitigates the risk. And the first question is that what size is that position as a percentage of your overall portfolio? And that's a real fundamental question, because what oftentimes happens is that people have two stocks. One is the safe idea, and they're going to put 5% of their capital in that. And the other is the risky one, so they're just going to buy 100 shares.
Okay.
And what happens? The risky one doubles, but they don't make any money, and the safe one underperforms. So the first thing in terms of how to buy stock is to use a consistent, what I call position size or unit. So you start with that initial position size of, let's say, and it's a longer conversation, let's say 5% of your portfolio.
Okay.
So you start with that 5% at XYZ at $50 a share. And my belief is, in fact, you buy it at the market. In fact, you buy it at the highest price possible. Sounds kind of counterintuitive.
No, actually not.
Not for
With
you.
Investors Business Daily, we actually buy stocks that are hitting new highs. So
this is why William O'Neill is a multi-millionaire.
That's right.
He knows how to buy stocks. People say it's at 50, but you know what? I want it at $49.94.
And then you miss out.
Right. And it's so contrary to logic, because you think, idiot, and I'm talking to myself now, not you, but you're buying at 50 because you think it's going to 70.
Right.
So don't squabble over those 8 cents to make yourself feel a little better. And that's a real fundamental idea.
It is. And you don't have to be afraid of buying a stock as long as you have a place where you're going to sell it. If you don't just buy and hold and let it go down and down and down, then you're not taking that big risk.
Yes.
So even though you're hitting a stock that's hitting a new high, right, it's not as risky as it sounds. Stocks are hitting new highs for a reason.
Yes. And I mean, this is why in this battle of fundamental and technical analysis, and it's a long conversation, but my belief is, as they say, price is primary, and price is what we trade. So, as to your point, when the market is moving in a particular direction, when the trend is up in this case, the market's telling you something, and don't fight that trend. So, we talk a bit about position size. We talk about, and I'll add one more thing, if I could, in terms of at least how I believe you buy a stock, is don't be afraid to. People are so used to averaging down.
Right.
Averaging up, it's oftentimes the hardest trade you'll ever make, but the point is, if you liked it at 50 and it's at 53 now, this is the time I believe you should be adding
to your position,
adding to your position.
Yes.
So most people fundamentally, unfortunately, go about stocks just the wrong way. They buy too much of a weak stock, and then they add
not enough,
and then they add on the way down.
Right.
So it's not that the market hangs them; they put the noose around the neck and they do it themselves. So what you invest isn't important, but how you invest, as we had talked about, this is money and knowledge you can take to the bank.
And so, how can folks learn a little bit more about you if they would like to go to your website?
Yes. So my website is capitalistpig.com, and I have a host of informational materials there. And probably most importantly is my hedge fund, which has done quite well over the last 20 years on a risk-adjusted basis. So check it out at capitalistpig.com.
And there you go. That's the information we have today from Johnathan Hoenig.